Well, hello and welcome to this Moneycontrol live stream. I'm Nandita, Khemka, and with me I have my colleague Santosh, Nair, and we'll be talking about a very important global event that the markets will be watching out for with bated breath. Yeah, it's the Fed's D-Day or decision day today, and expectations are building up of a 25 basis point rate hike. Santo, 2 weeks ago, the narrative was completely different. We had the Fed chairperson, Jerome Powell, and other Fed members coming out and saying that, longer rates will persist for a longer period, higher rates rather, will persist for a longer period of time. And people were building in a case for 50 basis point rate hike, given the strength in the US jobs market, the high inflation, and in general, the strength of the US economy. But now, it's just been 2 weeks and the entire narrative has shifted because of course, the global financial crisis that's playing out. We saw 2 US regional banks going belly up. We saw the rescue is one term that nobody wants to use for Credit Suisse, but we did see UBS coming in and taking over Credit Suisse. So in light of all that, the Fed faces a pretty tough task of balancing inflation and of course calming fears over a contagion as a result of these this banking issue. Would you also say that a 25 basis point is looking much more probable, if not a pause at this current juncture?
Well, Nandita, yes, as you rightly mentioned there, it's a very tricky situation that the Fed finds itself in right now. Now, if you look at it, there are merits for both the arguments, a 25 basis point hike or also a zero hike. Now, the Fed is still battling inflation at this point in time, right? And if it were to pause on the rates at this stage, now one message it could probably also send out to the market is maybe that the banking crisis is so severe that you really need to...
That there is more to come.
Yeah, you need to cut back on the rates.
Yeah.
On the other hand, a 25 basis point hike might kind of also give the signal that it's okay, we have that pretty much under control, and inflation is what now we are trying to battle. So there are merits on both sides, and some like Goldman Sachs have said that it doesn't make sense to hike rates further because see, the whole idea behind the Fed hiking rates is to cool down credit in the system. Now, if there are problems at many of the smaller banks, automatically lending standards get tightened, which means that credit flow will automatically ease. So even without the Fed actually hiking rates, it does have the effect. But the Fed's worry, which is also understandable, is probably that the moment it backs off on hikes, the stock market gets excited.
Right.
You again see a rally, and that defeats the whole purpose. So this is what probably the Fed is trying to guard against, and which is the reason why you could possibly see a 25 basis rate hike.
So what would you be watching out from the Fed chairperson's commentary? A lot of people are waiting for the future rate hike path, given the fact that 25 basis point is largely factored in. As you mentioned, a pause may be off the table because it may send out a wrong signal to the markets, right? So what exactly would you be watching out for? And analysts are also saying that it would be tough for Fed to actually give out a rate path just yet because the banking turmoil is still playing out, especially with what's happening with the First Republic Bank. So what is it that you would be watching out for?
See, some people are already saying that probably there is a need for the Fed to perhaps stop giving guidance, given how fluid the situation is. It doesn't make sense. Like you said just a short while back, 2 weeks back, Fed said that there's the likelihood of a 50 basis point hike, but that's suddenly gone out of the window. So given that the situation is pretty fluid, we don't know where the next problem could be coming up. Guidance really doesn't make sense at this point in time, and there's something that the Fed has said in the past also, that they would take decisions based on the data that is coming in. Now, if you look at really the inflation part of the equation, Fed's big problem so far has been that much of the trouble is coming from the tight labor market for a variety of reasons, and that is something the Fed has really not been able to control, right? So my guess is that probably Fed will say pretty much what it has been saying earlier, that it will look at the data.
But do you think the tone will turn into a bit of a dovish, it will take a bit of a dovish tone instead of the ultra hawkish tone it was adopting just a couple of weeks ago?
See, for now at least it does seem like the banking, the turmoil in the banking system has been brought under control. So one can't expect the Fed to sound very hawkish. So at best, I would say that it might sound a little neutral, saying that if inflation continues to rise, probably that will take the steps that we have been taking so far.
Right, Sandra, I'm sure you must be talking to a lot of analysts about this entire banking turmoil. I'm reminded of the cockroach theory that Warren Buffett had, you can say invented. There is never just one cockroach in the kitchen. So, the problem is such that, you can never be sure that it's over because it just started. It's just been a couple of weeks. So what are you picking up from analysts? Are they expecting more such banks to go belly up, or, it's largely contained? Because it's not, most of them are saying it's not a systemic issue. It's a very specific issue because of rising interest rates that these banks are facing, and it's not about the wrong investments or bad assets, right? So what are analysts telling you about this crisis? Is it pretty much done, or can we expect a little more going forward?
Well, Nandita, I would like to draw your attention to the remark that Treasury head Janet Yellen had made at a public function. So she said that the Fed will step in if it sees that there is systemic risk, and it will protect depositors at other banks also.
Right.
Now, this was one of the reasons you saw banking stocks rally last evening in the US and Europe. But again, market observers have said that there is a risk to this kind of approach also. See, the moment you're giving a blanket cover, it indirectly it is also giving a license of sorts to depositors to be a little careless. Right now depositors, they tend to spread their deposits so that there's no concentration. It may give a license to banks to become a little more reckless, because they know that no matter what they do, depositors are unlikely to leave, because depositors don't see any real risk to their money, right? So that may encourage banks to become more reckless. So temporarily this problem could be solved, but again it could kind of set the tone for bigger problems coming in future. And again, as you said, the issue is not with bad investments, but we also have a problem of rising rates, which is still there and not likely to go away anytime soon. So will there be huge blow-ups at this point? Nobody can say.
Right. Let's also talk about the Indian context here. RBI, we all expected the last hike to be the last one from the RBI stable, but of course, even Shaktikanta Das had said that he'll be watchful of the global situation. So if the quantum of interest rate hike today is lesser than what was being expected, do you think the RBI will look at a pause in the April policy, or do you think it will press on with that another 25 basis point hike and then maybe look at a pause?
Well, one of the things that RBI also needs to keep in mind is the differential between interest rates in the US and the Indian rates. If differential is very large, naturally there will be some amount of outflows, money moving out of Indian debt into US debt. So that risk is always there. So even if situations are slightly better on the inflation front in India as compared to that in the US, the RBI really can't afford too wide a gap there. That could create problems on its own. So if the US continues to hike rates to some extent, I guess just so that the gap is maintained, probably you could see some more hikes coming in India as well, at least to some extent, because let's also understand India is not completely isolated. Right? If there is turmoil in global markets, as we have seen in the past, also India also feels the pinch to some extent. We saw that in the 2008 global financial crisis. So something similar can be expected this time also. So again, very hard to say, although we don't really need to hike rates as aggressively, given that inflation is not so bad. But there is this other factor also, that if US keeps hiking rates, to some extent we can't afford to be too far behind.
Yeah, that's true. Another thing I want to ask you was, can we expect a rate cut from Fed in the second half of this year? Earlier, obviously, people were saying that maybe it will only be next year till Fed decides to cut rates, because they were, planning to keep the rates, even if they were to pause, they were planning to keep the rates higher for longer, as I said. But do you think a case for a rate cut is also building in?
See, at some point, the Fed will have to end the rate hike cycle. So that might come at some point, definitely. Again, hard to take a guess there, because the Fed's biggest worry is that the moment it slightly backs off on the battle against inflation, stock markets get all excited. So that is something that the Fed has been trying to guard against through A, rate hikes, B, very hawkish commentary over the last many months now. But this is a market which is just looking for the slightest ray of positive news, and the moment the Fed pauses on rate hikes, let's say inflation is still not under control, then it would make the Fed's battle that much more difficult. So I think that is something at this point which is holding back the Fed from easing on rates.
Right, my last question, we have seen a lot of volatility in our markets, right? So if the Fed goes a little slow on rate hikes and looks at a pause or looks at a rate cut, do you expect the foreign inflows to return to Indian markets, given the fact that they are going to other markets like Taiwan, Korea, and others which are cheaper than us, but we have also come down a fair bit from record levels, right? So in the wake of that valuation correction, do you think we can expect foreign investors to come back anytime soon?
Well, of course, valuation, as you mentioned, they've come off quite a bit, but again, I guess there are still some concerns, because valuations at any point in time also reflect the future outlook for earnings growth. So if valuations have come off, it also means that the outlook on future growth at this point is not all that great. So unless that really changes, you won't really have foreign investors coming back in a big way. Of course, the big fall that we saw of late, maybe that could get arrested, but you also have some of the other markets looking attractive at this point in time. Maybe these things are quite dynamic. If a lot of money goes there, automatically they become expensive, we start looking attractive in comparison. But for now, there is more money going to other markets where the outlook on earnings seems to be better. And unless that reverses to some extent, it's hard to see big money coming to Indian shores in a hurry.
Well, I think I've taken a lot of your time, Santo.
That's the word. Pleasure chatting to you, Nandita.
Thank you. So we are expecting a 25 basis point rate hike today, and of course we'll be getting you live coverage of Jerome Powell's commentary after the press conference. That will of course be tomorrow at 7 a.m. So do tune in, and of course we'll also get you an analysis of the Fed commentary in the 8:30 a.m. show later with the Global Voice. Well, for now, it's a goodbye from me and Santo. But for more news and updates, keep following Money Control.